In today's video, I'm going to walk you through an indicator called Breakout and Retest Signals by Algo Alpha. If you've been trying to trade using breakouts and retests, this video is made for you. We'll break down exactly what this tool is all about and how you can make it work in your strategy. If you learned something useful, don't forget to tap the like button. Alright, let's get going. First things first, to get started with this tool, you'll need to head over to TradingView. It's the charting platform I'll be using throughout this guide. If you're not signed up yet, you'll find the sign up link right down in the description. From there, go ahead and pull up the 15-minute chart of GBP, JPY, or any other pair that you want. Then hit the indicators button and search for breakout and retest. The one you're looking for is by Algo Alpha. Ladies and gentlemen, this is the powerful breakout and retest tool, an indicator crafted to help spot great trading opportunities using important pivot zones. It zeroes in on breakout and retest zones from past swing highs and lows, so you got a crystal clear picture of what's going on with the price. As you can see, it's super easy to use and is made up of a few parts. At the core, it highlights the support and resistance areas. This here is a resistance zone. It lines up with price's swing highs. The support zone looks pretty similar, but you'll find them forming just beneath key swing lows. Now, if you pay close attention to these lines, you'll notice they appear in three different colors. The basic shade is gray, and that's paired with a thin middle line. Then there's green on top and red on the bottom. The green area points to buy-side volume, while red marks sell-side volume. This volume reflects what's happening as price retests a broken support or resistance level. So for this resistance zone, green signals buy volume, and red points to sell volume. Instead of actual numbers, the volume is shown visually as a ratio. The gap between buyers and sellers shows up as a delta value, which is this figure right here. When we're looking at the bullish retests near resistance, this delta will show up in a green label like this one. As long as buy volume is higher than sell volume, the delta will be a positive number. But if sellers outnumber buyers, then you'll see a negative delta. If you want to trade long using this tool, you want to make sure the delta is in positive territory, which tells you buyers are in control when price retests that level. For bearish retests that happen at support zone, you'll see the delta show up in red, and the logic's the same. If there's more sell volume than buy volume, the delta goes positive. If buyers are stronger, it flips to a negative number. So the rule of thumb is this. When using this indicator, you want to see a positive delta that confirms the dominant force. Sellers for short setups and buyers for longs. Now let's move on and talk about how flexible this tool is by exploring its settings. This indicator offers a bunch of custom settings. In the inputs, you'll see an option for pivot detection period that tells the tool how many candles to look back to find support or resistance areas. I'm going to keep mine at the default. Next up is the confirmation multiplier. This divides the main pivot length by the number you enter here. Then uses that to delay signals until there's enough confirmation. I'll set mine to 7. That way, the signal appears one candle later, which is how I like it. Then you've got something called a swing points memory that controls how many recent swings the indicator keeps track of for its analysis. ATR length refers to the period of the average true range. It's used to calculate tolerance. You'll also see a multiplier here. I've got mine at 2. The higher the number, the smoother the tool becomes. You can also tweak the colors for bullish and bearish volumes if you want. Under the Style tab, you can toggle different display options on or off. After you set everything up, click OK. Now, if you want to trade using just this one tool, here's the idea. To go long, wait for the price to break above a resistance level, then retest it. If the delta is positive and passes a certain volume threshold, let's say 1000, you consider entering. But of course, that's not the smartest way to trade it. You also want to align with the larger trend. So we're going to bring a trend tool called 7 moving averages, 5 moving averages. As you can see, the name is like that. This one by Storewise. Double click it, and in the inputs tab, set EMA 1 to 8. EMA 2 to 13, and then 21 and 34. Go to the style tab and turn off every moving average except the first 4. Hit OK when you're done. This tool helps confirm trends by tracking 4 EMAs. When all 4 are aligned without overlapping and prices above them, it signals a bullish trend. On the flip side, if they're stacked cleanly but price is under them, that tells you the market's in a downtrend. Using these 2 indicators together, here's what you want to look for when taking a long trade. First, confirm that price has broken and retested the most recent resistance area during an uptrend. What that looks like is this. You can see the break and retest here. To confirm the uptrend, check the EMAs starting from the breakout point to the candle where you'd enter the trade. They should be spaced out and not touching. If any of them intersect, it voids the trade idea. The last thing you need to do is look at the delta. It has to be a positive number above 1000. Right here, you can see it clears that level, showing that buy pressure during the retest was strong enough to push price higher. That's your green light to go long. Place your stop either under the recent swing low, or if that candle is tiny, just under the resistance zone. Set your target at 1.5 times your risk and let it run. As you can see, that trade ended up in the green. Now for short trades, everything's flipped. You're watching for a bearish break and retest of the most recent support zone within a clear downtrend. Looking from the resistance point to your entry candle, you'll see none of the 4 EMAs are touching, and they're all stacked cleanly, pointing to the solid bearish trend. Now check the delta again. It needs to be positive and over 1000. And right now, it is, which confirms that sellers were clearly in control during the retest, making this a high probability short. Enter the trade, place your stop just above the recent swing high, and set your take profit at 1.5 times your risk. Let the trade run its course, and once again, you'll see this one worked out great. So to wrap it all up, the breakout and retest signals indicator from Algo Alpha uses smart pivot tracking, volatility filters, and volume analysis to help you spot breakout and retest setups you can actually trade. You can find it on TradingView if you want to try it out. Just remember, the strategy in this video is for educational purpose only. It's built entirely on indicators. See what other price action tools or filters you can mix it in to improve it even more. If this video helped you out, feel free to give it a like or maybe even subscribe for more. Thanks for hanging out. I'll catch you in the next one.